prices are going up at about at least $10,000 per month.
Where's the hotspot? Boom, bust, boom. There's some things happening right now that mean the next 2 years are going to shoot the lights out. Everyone talks hotspot.
They do.
Where's the hotspot? Getting the hotspot before it's hot. What are the signs? That is a bit of fuel poured on a fire that is currently simmering. Where's the hotspot?
Buying right now in the right city, in the right growth corridor, the tipping point, that's the type of pressure that interest rate drop has.
There cannot be a better time that I can see buying property than right now. Welcome back to Brick to the Future. I'm Al Lewison here with Cam McClellan.
Hey mate, good to be back.
Yep. One of my favourite segments is the listener questions. And for anybody listening, hello@opencorp.com.au. If you send your questions in, we'll try to work through them. We've had a really good question come up, Cam, and I thought it's worth talking about.
Yeah.
And the question is, you propose that you beat the average capital city growth rate over the last 10 years by 254,000.
Yeah.
How do you justify that was the question?
I think there's a bit of nearly an accusation in that question. The way I read it, it's like prove this. Yeah. So if you've done it, can you justify it, and how have you done it? So it's good. It's a ripping question, so I appreciate it. 254,000. Let's qualify exactly what that means. So that's on comparing the growth of all of our clients on average, or what their portfolios have grown by, compared to the growth of the 8 city capital markets. So if the 8 city capital markets have gone up by 500,000, hypothetically, our clients have made another $254,000 on top of that, which is absolutely astronomical. How do we justify it? Which I love when people ask us this, because I love to justify. It's not finger in the air. We've got an Australian Financial Services licence, part of one of our funds that we had to piece together for the product disclosure statement. We had to submit all of the data on all of our clients' growth rates compared to the 8 capital city markets to ASIC to be verified, and we're happy to do that at any point in time. So we're the only investment advisory firm that I know that has ever done that. So I'd love someone to prove us wrong, but we quite clearly can say we're the number one investment firm over the last 20 years based on our client results. And I base that on only client results. So I'm pretty proud of the fact, and I'm glad that old mate has shot us through that judging question, because I love sticking it to any competitors.
So judging aside, what makes what OpenCorp do special? How do we do that then? Everyone talks hotspot.
They do.
Where's the hotspot? Every conversation I have, where's the hotspot?
Yeah.
Who gives a shit? You've missed it.
By the time it's a hotspot, if you invest there, you're about to get burned, because it's too hot. The growth happens. So it's a good way to look at it. So if you hear hotspot, you're going to get
classic
burned.
Miss the boat.
Miss the boat. Exactly. So how do we get clients into markets that have yet to grow?
One, explaining to people what missing the boat means. So everyone's talking hotspot, where's the hotspot? And if you jump in when it's a hotspot, you missed out on growth. So that example is a great one.
Yeah.
40% growth in Brisbane in a 2-year period.
Yeah.
If you decide after 12 months, hey, it's a hotspot because the market's good, you've missed out on half the growth.
Yeah.
You want to be getting in there just before it happens, picking the signs, and we'll probably talk about those in a minute. What are the signs it's about to be a hot market? What are we looking for, and how do we then get in ahead of it?
Yeah, and I'd rather invest in a city that's got all of the good fundamentals poised for growth and have the property sit there to start with for a couple of years before it kicks off and get all of the growth, than invest in a city that's had large amount of growth and's got some good media hype around it and is then going to sit flat for 7 to 10 years after that. So people need to understand we're investing in cities that have got all the fundamental signs of the market going up, and that's why we keep getting it right.
So property's obviously supply and demand driven. You've talked about what happens in a rising hot market. Developers are trying to get as much stock on the market as they can, because that's when they can sell them.
Yeah, correct.
The increased buyer activity, so there's a couple of measures for that. Days on market, or average days on market, is a good indicator across a lot of the cities.
Yep.
I think in Perth recently it was down to something like 8 days, just absolutely ridiculous.
Yeah.
And the other one you can use in states like Victoria that have a lot of auctions is auction clearance rates. So Brisbane, Perth, not so much, but in Melbourne, that's a great barometer of what's happening in the market. How quickly are auctions happening and turning over?
It's a good indicator of consumer sentiment. Buying at auctions, consumer sentiment is the indicator. Where real supply inconsistencies happen is on the outer skirts. So it's a good one in Melbourne and Sydney, because that's where auctions happen, in the middle ring suburbs, because if auction rate clearance rates are up, that means that people are buying, but it's really they're just swapping houses, because they don't move to those areas. And in the other capital cities, auctions aren't really as prevalent as Melbourne, Sydney.
Sure. Those things are happening, and the time the market's short, auction clearance rates high, the market's going well.
Yeah.
Vacancy rates is another one. Currently, entire country, historical low vacancy rates, probably a reflection of housing policies across the country. But again, that means that there's limited stock, supply and demand driven market, limited stock, rental vacancies low, equals not enough houses, equals should be upward pressure on pricing.
Yeah, so overall the government set up the Housing Supply Council, which is an independent government body which is there to try and fix the long-term housing shortage, and they haven't understood how to fix it. But you're right, en masse you can say, yep, generally the Australian property market is good and is going to be good for a long time. What our team do to get the sort of growth that we're talking about at the start, $254,000 over and above what the standard growth rate is in the capital cities on average for our clients, is that they find those areas that have infrastructure going in, which brings population growth into a growth corridor, and really limited land supply. And when you've got that combination, you know you're going to get that growth that just outstrips the market. And that's where our clients do so well.
One of the absolute ones that still surprises me to this day is the FOMO factor. Like, everyone hears the market's going well.
Yep.
Newspapers start saying market's going well. Newspapers say, boom, bust, boom. And every barbecue, work function, family event you go to, every person suddenly is talking property.
Yep.
I'm going to need a property. I heard about a property. A friend made money in property.
Yeah.
The FOMO factor drives the market that last little bit once it's well into the cycle. So all those factors we talked about, being rising property prices, increased buyer activity, low vacancy rates, FOMO, that's what happens in the market. What causes it? What causes those things to suddenly get going?
Yeah, so population. So there's two main factors that we always look at. Two main factors, supply and demand, which demand is population growth. So that's the key, so we always look for it. Now, Australia's population's projected to grow 30 million by 2030, which is a 10.7% increase in 6 years. Between 2020 and 2025, we've seen the population growth nearly 5% already. So we're probably going to smash that out. Australia needs a big Australia. The government need it to pay more taxes, to reduce the gross domestic product debt ratio. So to pay off the debt after COVID, so they're going to keep cranking the population. So that's demand. Then on that side, you've got supply, which is at the moment, the annual housing completions are dropped 40,000 homes, but the state currently needs 80,000 homes per year to meet the future demand. That's just in Victoria. Now, the government at this point in time, the average build approval rate is 27% below the 10-year average. So we're not even we're building half the homes now that we need to meet the current supply, let alone the future population growth.
With the gates open.
With the gates open of population growth coming in. So supply and demand, you've got a long-term issue with supply and demand, which is great for investors, tough if you want to try and buy a home. But as far as people in the market who have got property at this point in time, which is why buying right now in the right city, in the right growth corridor, is paramount for anyone wanting to get into the property market or to set themselves up or their kids for the future.
I think as well, I mean, you sort of touched on it before about market sentiment, buyer sentiment, whatever sentiment you want to call it. But when there's economic strength, people have more comfort. They'll keep their job. People have more comfort and confidence probably to get out in the market and make those investments because they're confident that going forward, things are going to be buoyant for them and they're not going to, some of the negative thoughts you can have, what is the market corrects or there's an election or whatever those things might be, that the naysayer thoughts in your own mind. But when the market's economy's good, you're confident you've got a job, your longevity in a job looks good, you're more likely to go out and invest, and that drives the market.
Yeah, absolutely.
The other thing, and you've talked about the importance of being in front of the hot market.
Yep.
So
it's really important.
Really important. There's a little thing happening out there, and everyone's talked about it flat out for the last 2 years, called interest rates.
Oh, yeah.
So the interest rates are talked about dropping early next year, worst case mid next year, let's call it May. That is a bit of fuel poured on a fire that is currently simmering away.
Yeah, so in the past when interest rates have dropped, and it's a really easy calculation to sort of generally get your head around, when interest rates drop 1%, the property market goes up $100,000. So that's the type of pressure that interest rate drop has. So you're right, it will absolutely pour more fuel on the fire. It'll get the consumer sentiment base points up to tipping point, and then away we go, another hot market cycle comes.
So we've sort of jumped in to now we're touching on the reason why people have to act.
Yep.
Because we've told them don't be a dickhead and wait to be in the hot spot.
Yeah.
Get in front of the hot spot.
Yeah.
Be in the hot spot before it's hot.
Yeah.
The interest rates is one, but why do they have to act now? Like, what happens if they don't?
Yeah. All right. So with the property prices going up, and this depends what stage of life you're at. So if you're a first home buyer looking to buy your first home, potentially consider an investment property instead and go and rent a really nice place in the place you want to live. Use your deposit saved to get into the market, but do it in a smart, well-chosen investment property which will get much higher growth and allow you to get your dream home in 10 years, as opposed to buying a home that's semi-okay with a 40-year mortgage and then you change it over in another 10 years and extend your mortgage out another 40 years. So you basically got a mortgage till you're dead. So getting into the market now, buying an investment property in the right growth corridor that's going to get the sort of growth our clients have achieved consistently over the last 20 years is important. For people who want to pay off their own home, and to do that, it's pretty easy. You can buy a couple of investment properties, let them double in value, and then sell them and pay down the debt, and you can knock off your home loan into 10 years' time. But if you wait, the property prices are going up at about at least $10,000 per month at the moment in the areas our clients have got their properties. If you've got your own home, you've had your own home for 2 to 3 years, you've got enough what's called equity or growth in that property you can use for a deposit. So you don't need to save for another deposit.
I've got the luxury of having access to the team's data, obviously.
Yeah.
So I'm sitting here right now saying to people, there cannot be a better time that I can see buying property than right now in the next 5 years. There's some things happening right now that mean the next 2 years are going to shoot the lights out in particular markets in Australia.
Yeah, I'm going to throw another big firecracker right into the mix here. Yeah. So, well, we've talked about the overall property prices are going to be strong across the Australian property market for the next couple of decades based on the supply and demand. We're talking about interest rates coming down, which is going to fuel that further. We're then talking about finding the right property in there. What we've got actually is one big key factor over the next 2 decades is a generational wealth transfer that's going to occur, which is about $3.5 trillion getting passed down from baby boomers to that next generation, which is going to put so much surplus cash in those people's hands. And what do they do with it? Go and buy an investment property. They might go on a holiday, but a large portion of them will go, I've done well in property, so I'll go and buy one investment property or help my kids get into the market. So that's going to fuel the market even further. So we've got basically a perfect storm happening here over the next decade. And if you're not in it, you're not in it to win it.
And for anyone questioning why the generational wealth transfer, that's actually hard to say, means something different in different hands, just think of people in your own life. So if someone's an 80-year-old, they're not out flaunting their money, they're not out investing, upsizing and doing things. They're sitting there conserving their money and just trying to get through the rest of their life. Put that in the hands of someone who's 40, who's got aspirations and dreams and wants to build wealth for themselves. That money becomes active. That money gets in the market. That money drives the property market. You don't want to be sitting here waiting. Missing the boat.
Correct.
When that gets in the market, makes the hot spot.
Yeah, absolutely. So if you want to find out where the hot spots are before they're hot,
hopefully this has helped.
Get in touch with the team.
Yeah. Thanks for tuning in. Hello@opencorp.com.au with any questions, and don't forget to subscribe.